Today's World Insight. The Wall Street showdown over GameStop share prices, a storm in a teacup, or the tip of the iceberg. How troublesome for the bourse. And a vaccine wall of defense against COVID slowly built up dose by dose. But are variants already poking holes in the weak wall? Can research keep up? Insights from the head of the European Research Council.
Now the difficulty is not only the science, but now the industry that is to produce enough of this vaccine.
Here is our host, Tian Wei.
Hello and welcome to World Insight. I'm Tian Wei. U.S. Senator Elizabeth Warren and Bernie Sanders are calling for more action against U.S. financial manipulation. They took their cue from the skyrocketing share prices of GameStop, a video game retailer. Traders organized over Reddit and other platforms bought GameStop stocks en masse to punish hedge funds and other wealthy investors who bet its price would fall. Concerns have been growing that wild swings in prices of GameStop and other shares could trigger volatility for the broader stock market. U.S. Treasury Secretary Janet Yellen is set to meet with financial regulators this week. What's behind Reddit users' purchase of shorted stocks? Could the recent online frenzy spark new market regulations? Let's loop in our panelists. For more discussion on the GameStop in Washington, D.C., we're joined by William Li, the chief economist of Milken Institute. In New York, Professor Max Wolf, CEO of Systematic Ventures. In Guangzhou, Hong Hao, the managing director and head of research at Bocom International. Last but not least, in Beijing, Xu Sitao, the chief economist of Deloitte China. Gentlemen, what a pleasure to see all of you. May I start by asking Mr. Li, what really happened? What's the nature of this recent saga?
Well, the market volatility started with imbalances in the marketplace. A lot of people, hedge funds were short. That is, they sold a lot of shares of a very small capitalized company called GameStop. And for the first time in the history of U.S. financial markets, the retail crowd, the retail buyers, people like you and me, got wind of this market imbalance through a chat room called Reddit and some other chat rooms, and they all decided the market imbalances represented an opportunity to make a lot of money. So the force of the social media got people to start buying this company that was being heavily sold by the hedge fund, and you saw a massive upswing in these prices. And as the prices started to go up, there was a huge amount of momentum gathering, and to that point, people started to get nervous that the market may have overreacted. Prices for GameStop may have gone way beyond what it was worth fundamentally, and so there was a tug of war between the people who had investments in wanting to push up the price of GameStop and those who really wanted to push it down. This is in fact part of the price discovery process that's typical of capital markets, made an extreme by the huge imbalance that the hedge fund started with, where it shorted more than 140% of the amount of stock that was normally traded every day, and those who caught wind of that market imbalance tried to make advantage of it.
It's very interesting that the media has been portraying it as the small guy fighting the big guy, as a financial revenge against the big ones. Of course, the reality may prove a different story or different stories. But what exactly do you think, Mr. Wolf, happened? What is the nature, from your perspective, of all of this?
Yeah, so great to be here. I would say I think the media story is more the press fell in love here with the story of David versus Goliath, with a victory for David, which of course is exciting because it's rare. Right. I think there's a lot of problems with that story here. One being that the largest single asset manager on the face of the earth, BlackRock, was the single largest beneficiary. So I think it's sort of David won and you had a bunch of relatively smaller players. So I would say that the short side of the market tends to be small. On a volume weighted basis, it was very large here, but these are small niche funds. And unfortunately, a lot of what they do is provide a balance to a market in the United States that's been melting up the very expensive stocks and indiscriminate buying. So they're the sort of good guys in a weird way here, even though that's counterintuitive, in part because when stocks fall, it's the shorts who buy them. So they are important to stabilize the market. And I think we had a bunch of sophisticated players seed an idea in a bunch of small, relatively new stock traders using these free popular phone-based apps. And they were able to temporarily suspend the laws of gravity. But just as when we float high in the air on a jump or something like that, eventually the solid, heavy, dense object falls through the air. And I think we're seeing a little bit of that here too.
The law of gravity actually has always been there, and eventually it is there anyway. And we saw it over the past week. Mr. Hong, of course, you and Mr. Xu might be observing this from afar, but really geography doesn't make a difference here anymore when it comes to financial transactions. How do you and Mr. Xu see the latest saga? How do you make up the nature of this? Mr. Xu, you want to go first, and then I go to Mr. Hong.
Sure. I think the previous two gentlemen already explained the situation quite well. This is a situation happened, not a penny stock, but in a stock without a large capitalization. I would be shocked if the same would have happened in a frequently traded stock, for example, like IBM or Cisco, right? So this is something I don't think would happen all the time. And secondly, if you look at the price, if I'm not mistaken, in the past 2 days, the share price has been hovering around $90. This has been a spectacular decline actually from the recent peak of $400. Clearly, those who paid for $40 per share, I don't think they are institutional investors. But anyway, this is still unfolding. At some point, I think there will be regulatory oversight of chat room actions. Really people, for example, 4 of us, we cannot correctly say we should be buying something. I think that's illegal.
Very interesting. There are a lot of issues involved here. We're going to throw some of them one by one for all of you to articulate. But let me ask you also, Mr. Hong, what's the nature of this? Your take.
Many people would like to see that, as the retail investors trying to squeeze the institutional investors. But the problem is that, if you look at the statistics, many of the institutional investors are actually making money from this trade. And the people who make the most amount of money are the ones, with the largest institution. And also, during the course of this trade, Citadel, for example, has been trying to change the trading rule by suspending the stock, etc., etc. So I'm not entirely sure that the retail investors are actually gain that much as portrayed by the media from this trade. And also, I think a trade such as this, it's unprecedented in nature, right? So I don't think many people in the market have seen this before. And I think that the issue really is that it creates sort of a unwanted market volatility, in the sense that people who have a short position in this stock would have to sell other positions to raise capital. If they can't raise the capital, they will have to face margin call, regulatory pressure, and all that. So it creates unnecessary market instability. So I'm not sure who wins or who comes ahead out of this trade. But I think from the market volatility we experienced in the last week, I would say that it's the large institutions who had the final say at the end of the day.
Yes, that is still the picture. But some would say, oh, you guys are all coming from either, larger financial institutions yourself, or, just look at your name card, or maybe involved in cooperation with them, working for them as contractors. And therefore, of course, you would talk on behalf of the big guys. What would you say, Mr. Wolf?
And there's a bit of truth to that. If you stay in the markets for a while, you usually end up working for somebody who has enough money to afford to pay you. It's another one of those sort of gravitational law of this business. I think I would say, though, that what we ended up hearing from these smaller folks was actually pretty scary. It was basically the idea that they wanted Robinhood, who was doing the trades, not to pause trading until it had the minimum regulatory capital required to pay them out. right? Which I don't think is a wonderful suggestion. There are some conspiratorial related issues here too, getting a group of people together to do this. And I think this idea of short sellers being evil and guys going long being somehow their victims is an upside down picture of the market, where the inverse is usually true. The weight of the market, the regulatory, the big players are biased to the long side. And the last thing I'll tell you is the sadder truth about where we're at in the capital markets in the US is we have a lot of unemployed people at home trading stocks for free, hoping for a miracle. And unfortunately, I think that's the bigger driver here. And I think that's destabilizing way beyond just GameStop.
Some of these small guys, quote unquote, they will come and do these things, while others say, well, you might be the eventual loser, which is apparently what's happening right now. They say, we don't care. As long as I throw the money and I take revenge against the big guys, and I feel much happy. This is not a rare phenomenon among some of the small investors that we have seen in this saga. How should we understand this?
It's really a myth to say that it's a David versus Goliath story, because quite frankly, in the history of U.S. financial markets and global financial markets, stock markets in small companies have always been very volatile. The A-share market in China is a typical example of an early stage market that was very volatile until they put limits on the degree of volatility. In the United States, small companies also are very volatile. In this case, what we saw was that it's in the grand tradition of market imbalances causing overreactions in markets. We had a catalyst in this among small people saying, we see a profit opportunity. But then a lot of the big institutions got in on that profit opportunity. So the huge volumes of trading that we saw in the financial markets was really both sides, hedge funds on both sides, trying to close that market imbalance. One interesting thing for policymakers to consider, though, is that the spillover effect from GameStop and some of the other shorted stocks didn't spill over to the broader market. The day that the GameStop was a big news, the market did go down, but that was also the day that there was announcements about how the vaccine strategy was not taking hold. The likelihood of a prolonged recession was greater because of the lack of vaccine. So there was other news that really could explain why the general market turned down for that one day, and for the last 2 days the market's been recovering. And so what good thing that we see out of all this is that the volatility is contained to those few stocks, and in a market that tries to discover what the value of a stock is, you have a lot of prices going up and down until you finally find some equilibrium. What the chat rooms did was to catalyze one side of the market very quickly, and then another offsetting force took hold from the other large institutions. But it left the realm of the small retail investor and entered the room of institutional players as soon as the volatility started to generate profit opportunities. And that's where you saw the big money come in and the huge billions of dollars come in.
So that only tells us probably one rule of the world. Some would sarcastically say, Mr. Hong, that really it is the big guys that's dominating everything. So the small investors, no matter, even if when they're united, quote unquote, as they claim this time, would not even make a difference, Mr. Hong.
Well, for now, it seems that the retail investors, had a good initial run, but then, gave all the gain back, plus some more. Right, so I actually think
if
that
not
retail
more
investors are losing money. Yeah, and also I think last Friday is actually the third largest single day surge in VIX, the implied volatility in the market in history. Right, that is huge. So I would say that it is affecting the market in a way, and also the volatility is spilling over to other names that is being mentioned in the Reddit chat board. For example, Silver, AMC, BlackBerry, and all that. So, and also it creates capital constraints on many of the market makers in the market. So I would say that, maybe people want to portray it as a Robin Hood, trying to get even. But then at the end of the day, the rules of the trading rules are set by institutions, and it's very difficult for the retail guys to change it.
Chat room is a word that all of you mentioned repeatedly. This time it played a very interesting role. Professor Wolf, tell me more about your thoughts regarding this social media. Has it been used by some smartly, or shall I say sadly smartly, as a tool to take advantage and manipulate the small investors and put in some kinds of mood, sensation into this, and eventually become their best source for having their stocks up and taking great advantage of the latest chaos? Not chaos, but nuance.
Sure. So, I mean, first thing I'd say is these are not investors, right? These are gamblers. And actually, some of the early guys in the space are professional sports gamblers who pulled in a couple $1 million and then told everyone else to buy what they had to try to take the run up. And there's also starting to be some evidence that they also got out while still telling everybody else to get in there. So I think sadly, what the little retail investor did is trade an unregulated, unscrupulous counterparty for a more regulated, more scrupulous, larger counterparty, right? So the guys they hate were actually nicer to them than their heroes, which unfortunately is a story we've heard before in history. I do think social media is a good organizing tool, but I can tell you that I could get 3 guys out of my shop, and there's nothing super special about us, to use natural language processing, read this message board faster than any human being could have, front run them, and pull all the trades out before they could get to it.
Right.
So part of what you just see is a whole bunch of people like in a riot running through a hole in a fence.
Right.
So it's hard to know the long-term historical value of that, because if you start deploying technology, unfortunately, technology is also a spending war, right? So I think this is kind of a gambler's hole in the fence, and it's a great story because I think it touches a lot of the real issues of our time: inequality, a sense of frustration, the desire to use new tools to create new opportunities, when the United States is unfortunately living through a pandemic which has made our inequalities more obvious to us and more extreme.
Mr. Lee, you work for the Milken Institute. Of course, it's always interesting to see how big investors particularly, work with the regulators. How do you see the latest situation about regulation? Janet Yellen will be coming, much more visible, I'm sure, as we speak, after sworn in as the Treasury Secretary. How much are we going to see there?
Well, I think right now they're in the process of investigating. Janet Yellen called a meeting, as you know, of the Treasury officials to try to get to the root cause of some of this market volatility. Now, let's not forget, when we talk about social media in these chat rooms, we've had a social media for institutional investors for a long time. They were called Bloomberg, CNBC, BBC Business.
Fair.
We have chat rooms for professional investors where a lot of institutional analysts come on and essentially talk their book. But there's a disclosure that says, this is my book, and they're supposed to be independent analysts that give opinions for what stocks are good and good value and so on. So having a chat room is something that is an ongoing process that we've seen for forever. What's unusual about this chat room is that these are retailers who are not professional talking heads that are naturally going to be giving opinions. And the fact that they caught one trade that was a profitable trade for at least a short amount of time shouldn't cause an over-regulation of the freedom of speech that's in these chat rooms. And I think the SEC is well aware of this. The notion of what constitutes a rumor that generates market instability, market imbalances, and market fraud, those are the issues. Are people in the chat room really trying to fleece somebody to buy something that is either not what it's supposed to be, or is against their own interests? So sorting these things out in social media is going to be very difficult. But the notion of clamping down on freedom of speech is something I think that's an anathema in this country and would be resisted very heavily.
Having said that, though, we've seen with the GameStop saga, there are certain KOLs, huge KOLs, could be some of the richest in the world, but has been, having an image of the most innovative in the world, and also speak for the small guys, that are having huge impact on people's mood. Are they comparable to some of the earlier legendary figures who could be, manipulate the market and swing the market with mood to one direction or another?
No, I don't think so. The chat room phenomena that we see is something I think that's maybe just a passing fad. When once sports betting comes back, they're going to be betting on the Super Bowl just as easily as they are on GameStop. So I think as a source of financial market instability, we're going to see very limited examples of it. And I hope going forward, we're going to be able to focus on the real cause of imbalances, which is the T+2 settlement rules and the fact that the Robinhood had to stop trading because they didn't have enough settlement capital.
Yes.
If we just shrank the period for settlement, the problem would have gone away.
Tell us what eventually this tells us what needs to be observed from now on in order to make better change. Mr. Xu.
I think ultimately major central banks may really have to take a harder look at this prolonged period of low interest rate, because with such kind of liquidity, I think people always want to find the bubbles. So from that perspective, I do think one of the major consequences of zero interest rate is financial instability.
And the bubble bursts, that's the problem.
Yeah.
Mr. Hong, your take.
Yeah, well, I think, to me, volatility can come from very sort of unexpected sources. For example, in this case, GameStop and other, related names. I would say that, there are still regulatory loopholes in the system that can be explored, and that can create gigantic market volatility. So at times like this, when the market valuation is very high, liquidity is still very strong, if we have some unexpected source of volatility, it could create a hole in the system. So I think people need to be, regulators need to be looking into that.
Mr. Lee.
I think the danger of overregulation from all the discussion we've heard so far is in the air. And I would be cautious about overregulating a market that has worked well for centuries. What we have to revise are some of the arcane accounting practices and settlement practices that was in the paper age and update them for the 21st century. Even Saudi Arabia's stock market had T+0 settlement. There's no reason why our technology won't allow all markets to go that way.
Last but not least, Mr. Wolf, is this the beginning of something that we still don't know, or is the end of something that's likely to wrap up very quickly?
So I think this exact trend may be fairly short-lived, but I think what it indicates, unfortunately, won't be, which is as long as there are perceived honeypots and bad guys out there, there are a lot of people with little to lose and a big appetite for fast gains. We're going to have misadventures. I think those might be concentrated more among speculators than investors. I think it's probably good for us to draw a line. One thing that is positive that comes out of this, I think, might be we might revisit the idea of an ultra short-term hold period transaction tax, where we start taxing people who hold positions for less than, say, 1 minute, which might be a good source of tax revenue to deal with social issues without over-regulating these markets. They can continue to work as quickly as they need to for the modern era.
Fascinating stuff. Thank you so much for all of your input. William Lee, Max Wolf, Hong Hao, last but not least, Xu Sitao. Thank you so much, gentlemen. Really appreciate it. And you're watching World Inside. I'm Tian Wei. Still to come in the program, a vaccine wall of defense against COVID slowly built up dose by dose, but are variants already poking holes in the weak wall? Can research keep up? Insights from the head of the European Research Council. Next.
Now, the difficulty is not only the science, but the industry that is to produce enough of these vaccines.
You're watching World Inside. I'm Tian Wei. Vaccines are seen as the best weapon to take a bite out of the pandemic. No wonder China recently announced that it would contribute 10 million doses of COVID-19 vaccines to COVAX, the platform. In the United Kingdom, the number of COVID deaths has reached 100,000, fearing the spread variant. First discovered in the UK, European countries have also tightened borders and stepped up monitoring. But is the speed of research keeping pace with the raging pandemic? How can global scientific efforts turn the tide against COVID? I spoke to Jean-Pierre Bourguignon, the president of the European Research Council. Take a listen as to what he has to say. I'm so happy to be joined by Jean-Pierre Bourguignon, who is the president of the European Research Council. Mr. President, welcome to the program. Tell me, as a scientist yourself, how much do you think we know now, our limits of research as a result of COVID-19?
Well, as you know, the main thing was the capacity that was developed very early to identify the virus, because the key point was it was a new virus. And this was done actually in China very early on, and then shared with many people. And then the key point was to understand how different this virus was, how it was active. And this was made possible by all the progress in science and technology, which allows to really do, the sequencing of the virus and understand how it penetrates the cell. And then from that day on, people started to look for, of course, medicaments, cures, but also thought about developing a vaccine.
Yeah.
And this rush to have a vaccine has been made possible because a number of approaches have been followed in many different places. A lot of information has been shared. And then the great success has been, in particular, new types of vaccine could be developed using a completely new approach.
Yeah.
And now they are available in the world, a number of vaccines, which are, of course, now the difficulty is not only the science, but now the industry that is to produce enough of this vaccine, to distribute them, and to make them available very widely in the world. So it was a huge combination of knowledge, then technology development, and then, of course, really, industrial production and distribution.
Well, Mr. Bourguignon, to you, briefly, how do you see this, disconnect that we have witnessed over the past 1 year between real science and some of the, public belief and also social media debate? As a scientist yourself, how do you see this phenomenon?
Well, I think, you see, we are faced with a completely unprecedented crisis, at least in recent times. Of course, there had been, pandemics before, but one of this which spread so quickly. And then, of course, the reaction of many, many countries was how people wanted to know the situation to get a cure very quickly. So, of course, there was great eagerness, many places to really, find a solution and deal with the crisis. Of course, as you know, depending on the countries, the capacity to react, to mobilize people has been very different.
Yeah.
Altogether, Asian countries, in particular China, have been extremely good at controlling the crisis, even if it started to be serious. But very quickly, people organized themselves in a good way. In other countries, because by lack of determination, by lack of adhesion of people to the measures proposed, which were really completely unprecedented in terms of lockdowns. So this opened the way for a number of, I would say, fake news and statements which were really not backed by scientific knowledge to spread. And because people were anxious, they wanted to see answers to this very big problem. So I think it's not surprising that this has happened. For the scientists, we know that the only solid knowledge is knowledge which is done in a very methodical way. That is, in a way in which you make assumptions, you test the assumptions, you do serious trials at the right scale, and you confirm it, and you challenge it, and so on. But of course, this takes time. And clearly, in such a crisis, time is a very important variable, and people are impatient. And therefore, very often, people, but also maybe some media people, jump to the conclusion when the conclusion is not yet there. It's still being evaluated, it's being checked. But for scientists, the only good way of working is one has to be patient, even in these very difficult times. In one of the vaccines, which in Western countries is very much developed, the one by the company BioNTech and Pfizer, the man who created the company, BioNTech, Ugur Sahin, is a laureate of the European Research Council.
Right.
And he got support from us to study the similar type of vaccine for cancer. But then he decided, when the virus appeared in January, to really jump on this and try to see whether he, with his techniques, the new techniques of mRNA vaccine, whether he could deal with this new virus. And the extraordinary thing, and he was not the only one to do that, others were doing that elsewhere, he was able within a year to really develop a vaccine, which is an unbelievable achievement. So it shows that the complementarity between these two approaches, the one where you just look at people coming up with their most ambitious ideas, and the other one where at time you identify priorities and then you ask people to work on that.
What you're saying, President Bourguignon, is that plant the seeds during the sunny days, then you will have a real little plant to prosper, right? During the rainy days.
Exactly. So the Chinese say is perfect for that. And I think the difficulty at this moment is to keep convincing politicians that it's still time to plant seeds. Because their temptation is to say, stop planting seeds and now just harvest.
I know, that's exactly the question I want to ask you, Mr. Bourguignon. You know, the Horizon Europe, if I understand, is coming out. The budget is going to be a big thing after huge debate within the European Parliament and among the capitals. What's likely to be the real plan for the European Union for basic research and support organizations like yours to prosper?
Thank you very much for asking this question, because this
I know it's your daily struggle.
With in the fall a lot with many scientists and also many people. You very rightly said that the Parliament has been very active to support the fact that there should be an ambitious program to support research and innovation in Europe. And I think they obtain from the heads of states and government, European ones, of course, really some progress. And altogether, in the case of the European Research Council, which was in some sense my responsibility, I think we managed to get a quite decent budget for the future.
You know, there will be enormous amount of talking about, oh, we have to reprioritize because we are in a very difficult situation, which is true. Fighting pandemic, you know, recovering of the economy, jobless, all these are priorities for government, certainly for European Union as well. How did you manage to persuade them? What is the articulation here? Briefly.
Well, maybe if you allow me, three key arguments. The first one is that we're talking about a 7-year program. So please don't be obsessed by this year or next year. You really have to take a long view. You know, in China and in Chinese philosophy, taking the long view is extremely important. So this was one of my terms. Please take the long view.
Yeah.
My second point was to show the very good example that at least at the European level, 2 of the key new vaccines were from people who got grants from us. So, of course, not to study that vaccine, but to study other vaccines. So it showed that some of the absolutely leading scientists had already produced really the basic knowledge which was needed to develop this new vaccine. So it was a perfect example of the need to combine, as you said, the moment where you plant seeds and the moment where you can actually harvest. And it's very clear that the support to basic research at that stage, when you really want to produce billions of vaccines, is as combined with an industrial component. And my last argument, of course, was to really tell them that if we want to train the next generation of researchers, we really need to give really some kind of visibility, some hopes, and some perspective that the next generation will have really the support to develop its initiatives. So if you are serious about the future and think about the next generation, you must support also this long time, this basic research with a vision and the trust that you give to the scientists to really make them comfortable with the idea of becoming researchers.
Well, they worked. Congratulations once again. But you know, there's one question, Mr. President. You witnessed the tech war over the past 2 years between China and the United States, for example. We also know that geopolitics, as I said earlier, is becoming a little bit more complex, to say the least. So what's going to be the role of science cooperation? That is so crucial because nobody could do everything all at the same time. So, Mr. President, as a scientist and as one heading the very basic research financing arm of the European Union, the European Research Council, how do you see that?
Well, I think there are two parts in your question. One is first to really understand, and actually you already gave good arguments for that, that really the development of science requires cooperation, because science is a common public good. I mean, science has no borders, and therefore international cooperation is fundamental for the development of science. That doesn't mean that the scientists don't compete. They compete all the time.
Yes.
Actually, they compete even with their next door colleagues. So I think the key point is to to really explain clearly why this international cooperation, at the same time with the competition, is absolutely crucial for the future development of science. That's one thing. And of course, the other element, which is slightly different, is of course the competition at economical level or technological level is slightly different, because in the sense the fact that you collaborate is not seen in the same way. Collaboration are more short term. So the second element, which is crucial, is to explain that to develop fruitful collaboration, people need to know each other, and these usually friendships or these relations build over decades. They are not just about next year. And that's why for the scientists, it's extremely important that there is some stability in the international cooperation. I myself have been benefiting a lot from traveling to a number of countries in Europe first, but also in the United States, where I spent some time, but also in Asia. I've been visiting many Asian countries. As you know, China is one of them. And each time it was really something which I benefited a lot, partly because people were developing new knowledge, which I didn't know, but also sometimes the approaches that people are taking are not the same. And you have to learn from the others. Very early on. My first visit to China was 1981. So a long time ago in a different country almost.
Last but not least, if you can, give me a 30-second answer, Mr. President. China, the European Union, what can we cooperate and work on basic science research? Priorities.
Well, the key point, as I said, in science, the cooperation goes through people. So it's extremely important that exchanges of people continue to be very active. And that, so therefore, at this moment, of course, it's a bit complicated, but I hope that as soon as possible, mutual visits, mutual exchanges will develop. And in this context, for example, the European Research Council has a collaboration, as an exchange program with the Chinese National Science Foundation.
Yes.
And we hope we can enhance this collaboration, because in the case of science, beyond sharing data, what is extremely important is having people sharing ideas and knowing each other better.
And trust also, so crucial. Thank you so much, Mr. President. Jean-Pierre Bourguignon, President of the European Research Council. All the best and be safe wherever you are. Jean-Pierre Bourguignon, President of the European Research Council. That's all the time we have for today. If you'd like to see more, try to find us World Insight or check out our YouTube channel. Follow us on Twitter and Facebook. I'm Tian Wei. On behalf of the team, thanks for watching. Bye for now.